will our project continue to issue currency, utility tokens? Guys, let's kind of quieter, take seats, or you can go outside for talk, or better wait for reception. Don't please help other people to calm down and take seats. Sasha, please come. Okay, so is there a future for utility token or security tokens? And where we should expect disruption? So today we see very few projects doing security. They still are preferring utility. Is there a future for security? Who wants to start?
I'll go ahead and take that on that one. My name is Reg Heuss. I'm the managing partner of CounterPointe Ventures. We're based in Seattle and have an office in New York as well. We've got about 100 million under management. Invested in 23 companies last year, all specifically in the blockchain space. To answer your question, we're just starting to see a lot more of the STO market come around. I think that we are still a little bit early, and in the next 12 to 18 months, when those first STOs that were hitting the market a few months ago get to the secondary market, I think that's where we'll see a lot of interest. I've talked to a lot of different LPs that are interested in our fund, and when I explain to them what an STO is, the question that comes back from them, smart, it's interesting, is that we're not as interested right now at the initial. We want to hit it on the secondary market, so let's mitigate the risk and let's take it when it hits that secondary market. So when those markets hit in the next 12 to 18 months, I think that's when you're going to see a lot more activity.
So, hi, I'm Barbara Jones. I'm co-chair of the blockchain practice group at Greenberg, Traurig, which is a large international law firm. My question for Greg is, with the security token offerings that you've been doing, are you actually issuing tokens or are you doing safeties?
So just to be clear, we're not issuing, or we're not doing that. We're looking at investing in, and we're working on projects that do that. So the two that we're the most interested in are very strongly backed assets, so precious metals, where there's actually something that's behind that token. I think that gets a lot of interest from the LPs we're talking to, obviously are funding us, are excited about that because there's a liquidity event that comes sooner. There's an asset that is behind it, instead of just jumping on something as we all did in the ICO craze a couple of years ago. So that's kind of how we're looking at approaching it.
Hi, my name is Igor Lavrov. I'm Chief Creative Officer of Paragon. Paragon is a blockchain solution for the cannabis industry. To answer your question, yes, definitely there is a future for STOs. With the only exception, I agree that we are a little bit ahead of times. I think that definitely if you're raising money, Reg A Plus is a great mechanism. I don't think introducing tokens right away is a great approach. I didn't see anyone yet who would explain why they need tokens at the early stage. I think it is easier and better to just raise money through Reg A Plus, Reg D, and then issue tokens when your platform is operational. I think it's a smarter approach.
I agree with you. I think, I'm Jessica VerSteeg, CEO of Paragon. We actually did a token crowd sell. We had an opinion from a securities lawyer who told us that this was actually a safe route. We were in a security and we could go ahead with it. But looking back at it now, after getting through all of what we've gone through with the SEC, Igor is right. It's you might as well just do a Reg A and then add your tokens on top of it, because doesn't really make sense to complicate things any further.
Thanks. So let's back up a little bit. When we're talking about offerings, and as Greg was saying, security token offerings, is there a future, and what actually are you investing in at the moment? At the moment, these are private placement transactions raising equity typically for a platform that is not yet live. okay? We're not selling, or companies should not be selling utility tokens or something that they think might be a utility token without some comfort from the SEC. As many of you may be aware, the SEC finally 2 or 3 weeks ago gave its first no action letter in respect of a utility token. It's on a closed platform. It can only be used for consumptive purposes for charter air flights on that platform. The tokens get burned after they're used. There is no external trading market. That is what the SEC has defined for the moment as an acceptable utility token. Anything else, they're going to consider a security. So if you're offering a token at the moment that has an external trading market, hopefully you have some good legal advisors who are speaking with the SEC and are giving you some guidance as to whether or not you are violating U.S. federal and state securities laws. There are a number of companies who organize offshore and try to conduct their offerings on the basis of some comfort from Malta or Singapore or some other jurisdiction, but they're still offering those tokens in the United States. Comfort from those countries outside the United States is great for those countries outside the United States if that's where you're buying. If you're buying inside the United States, you still have to comply with U.S. federal and state securities laws. It's a completely different ballgame. You need to exercise a lot of caution as to what you're investing in. Early stage, yes, for security tokens themselves, there are no security token public offerings like the Reg A plus type of offering that was referenced a couple of times here. Because even though there are, I think, close to 50 or 60 of those applications into the SEC, they have been sitting there for a couple of years, and the SEC has not approved one of them yet. The reason they haven't approved one of them is because the SEC is hung up on custodial issues, on settlement issues, on all sorts of back office infrastructure issues associated with the tokens. So they're not getting cleared yet by the SEC. As I said, it's too early yet because there isn't the infrastructure in place to support those offerings, either initially or in a secondary type of market. So what are people doing? They are continuing to do private placements. And as I said, if you've got a platform that's not live, you are absolutely investing in a security. Whatever you want to call your token, ultimately, you're investing in a company that either you're directly investing in the equity or you're investing in the promise of a token that at the moment is going to be viewed by the SEC as a security.
Okay. My name is Enzo Villani. I work with SE Transform Group. I'm a managing partner there. And I started SE Thrust Capital, which is an offshore fund. It's not really a fund, it's really my actual family office, but we are potentially going to turn it into one, and we're dealing with all of this stuff that is so much fun, including blocking all actual U.S. investors because you can't. So I worked at NASDAQ for about 7 years. I've been in the investor relations world for about 15 years. I rolled up companies that do proxy work, investor relations, all that stuff for very large public companies. I've been, totally on the line of living in the regulated environment. I think blockchain STOs really is a blockchain solution, back office type of solution. When I look at STOs, I don't really say to myself, oh, this is so innovative. It kind of is, but for straight through processing on the back end of all of the banks, the DTCC and all that stuff, and maybe getting rid of some of the friction. But most of it is just the technology at that point. I think what people want it to be is this cross, and I think it's a cool idea, is you get rid of the ADRs, you get rid of these frictions between border markets, so there's borderless trading. I also think that there's a problem with borderless trading, and I also think there's a problem with trading 24/7 in the equities markets or in any market. It's hectic. You wake up one day, and Bitcoin's here, and then you wake up again, and Bitcoin just changed. I think some of these tokens are so limited in their kind of liquidity that I actually wrote a blog saying we should have in the smart contract of the kind of security token or any token, you can do actually kind of limited trading hours. So there's all these ideas that are fluctuating about. The transfer agencies are involved, the DTCC is involved, IBM's involved, the government's involved. So I think, I think we're too early. I think it does have a future. I actually think public equities will be completely tokenized and be blockchained at some point. In fact, NASDAQ's already announced that they're going to do it. The transfer agencies are doing it, and including actually kind of computer share and the big ones. So all this stuff's going to happen, but it's very different than what you guys think. An IEO or a kind of utility token and this whole marketplace that kind of evolved out of it is almost like it's really a different world. It's very Wild West, it's very FX. It looks like foreign exchange, it doesn't look like equities trading. So all I'm saying is that I think that you need to, if you want to do a security token, you're going to be blocked by a gazillion jurisdictions. You're going to have a lot of issues. I think you should be very careful. I would do it as just do a Reg D offering, 506C with the Jobs Act stuff, and then if you want, promise a token at some point when the laws come into bear. The last point that I'll make is anyone that's looking at the kind of liquidity issue, and Thrust Capital, all we do is kind of liquidity. We trade in the markets that we help the issuer. Really, we buy tokens in blocks, so they don't have to try to sell their token on the open market. And what I think you're absolutely right. There is no secondary market. No ATS has been approved, and if they say that they have, they're lying. They're lying. It's bullshit. So any ATS in the U.S. that says that they're approved is not true. Do not believe them. They might be doing transactions of Reg Ds going back and forth like EquityZen does with Uber, but it's not a token, okay? It's not really what you think it is. So just buyer beware and just, be careful what you guys are hearing. That's mine. I think I'm done now.
Yeah, I'd just like to add, because you raised the point about IEOs, and I know that's a big topic here. But where I really want to go with this is to airdrops. The SEC doesn't like airdrops, and anyone in the United States needs to know that. So if you've got a company and you're doing an airdrop, again, you ought to be talking to the SEC and getting some comfort. There were a series of cases back in 1999 called the free stock cases, where, similar to airdrops, companies were issuing free stock, just putting it out there. And SEC enforcement came down on those companies, issued 4 different enforcement proceedings against those companies, and they sit there, in the vaults, and everybody kind of forgot about them pretty much, I think, because it was good old law, and nobody was paying much attention until all of a sudden airdrops came into being. But airdrops have the same issues as free stock, at least as far as the SEC is concerned, and at least if you're in the United States, you shouldn't be doing airdrops without comfort from the SEC.
Yeah, what about giving these airdrop tokens to accredited investors? So you check if they qualify before you send airdrop tokens to them.
So what is the purpose? So what is the purpose of an airdrop unless it's a kind of utility token to be used on the network? If you're just taking a security token, I'm just giving you a security. I am asking you, and you're working for it. That's actually compensation. You have to 1099 yourself, and you also have to pay taxes on what's called it's phantom income. Because until you sell that stock, you've actually taken in as income, but you haven't sold it, but you still pay taxes on it. So you have a whole tax issue there too on top of it all. So if they're going to drop a kind of utility token to be used on the network, maybe I think that would fly, but you'd have to be like all lawyered up and be ready to have a conversation with the SEC. But if you're dropping a security token, because I had this idea at NASDAQ where I launched corporate products, and I wanted the issuers to give away like a point system, and this, like if you own Dell stock, you would get a discount on a Dell PC or a laptop. Or Apple stock, you may get a discount on like the iPod. This is back then. So, but they were like, no way, you can't do that. So they wouldn't even do that. So I don't know how you're gonna navigate through that water. That's a difficult water.
So keep in mind that the SEC views every token that's out there except Bitcoin and Ether, which most of the regulators will accept as a recognized virtual currency to one extent or another. And so they put those two currencies in a different category. There's been the one no action letter on one utility token. Everything else from the SEC standpoint is a security. Okay, all those tokens that are out there are securities unless they've told you otherwise, or unless you've gotten a letter from them or you've gotten cold comfort from oral conversations with them. What your token is a security. That's a real problem in the United States.
Yeah, and if the security token is airdropped to accredited investor, then is it a problem? Or it solves the problem? So if you do airdrop for accredited investors,
Well, why?
does it
Yeah.
work?
Why would you want to just give away stock? I mean,
With a small amount in exchange for effort to bring other accredited investors.
Yeah, so see so the SEC's view on that would be that, you know, you're giving it a reason they don't like it, you're giving it away. Why? Why are you giving it away? You're giving it away typically to create interest in your platform or to create a trading market, either of which or both of which are going to increase the value of your company and increase the value of your token. Hence, they equate that to speculation, and that's why they don't like it.
I'm not a securities lawyer, but I think if you have a certain amount of shareholders, you are forced to become a publicly reporting company. There was a case with one restaurant in Florida that was giving away shares to the clientele that were dining there because they were promoting it as a family-owned restaurant and they wanted all clientele to be their family. And at some point, SEC showed up and said that now your restaurant must be a public company.
I think one thing that I've heard a lot at conferences like this, and everybody's always asking, what's the SEC's opinion? Barbara, you're talking about that, this one or that one. The truth is they're not going to make an opinion. They're not going to talk to you. It's very rare if you're, so even if they're saying, we're all sitting up here saying, go get the SEC's opinion, make sure you're all covered, make sure you're lawyered up, you still have to be very careful because they're not going to do it. It's not in their best interest to do it right now until they have more value into what they're looking at, until they know exactly what it is, until the market turns to that. I think some companies and some entities are doing a good job of lobbying that way. I think it's going to trend that direction, but the fact is if you're starting a company, you're trying to figure out if you're doing an STO or an IEO or whatever you're going to do, I find it very hard to believe and unrealistic that you can go to the SEC and say, hey, give me an opinion on this and push it out. It's not realistic. It's not going to happen. So you're going to have to take a gamble one way or another and either do it offshore or here or figure out, forget all of that and just do it through the regulated ways. That's my point.
I actually think with the right lawyers, you can get this. It's tough, but it's doable. I mean, Paragon learned the hard way. We went with a lawyer that is a great guy, early and creative, and wants what we all want. And he kind of had he was hoping for it, but there are lawyers that will actually put their foot down and talk to them and make sure that they won't give you an opinion or let you do what you need to do until they've gotten word back from the SEC.
Sorry. So the SEC will talk to you, and they are, I think, very responsive. We've gone to the SEC on behalf of a number of clients. We've worked through structuring issues with them. Some clients have ultimately changed their structure as a result of the conversations with the SEC to accommodate concerns that the staff had. Others have decided they're not going to change their platform the way that the SEC is asking them to, and they just exclude the United States completely from their token offerings or from their platform. They block it, as somebody was mentioning earlier.
I guess the point is if you're worried about the SEC, then don't get into this game for right now because you don't know what's going to happen down the road. You really don't. That would be my recommendation.
So we do know that there are a couple other jurisdictions that do have STO kind of exchanges, right? So the LA token guys or LA token, I'm not sure if that's the LA or LA. But I know you guys are getting two actual jurisdictions. You're going to have actually broker dealers outside of the United States. So the exchanges are stepping up, the ones that kind of want to play in the space. Even the Binance of the world, they're all going to step up. And then also, you know, you can do a security token offering, but I think I would, you know, if that was me, I would have a utility token if I wanted to do an ecosystem on the blockchain that was a public blockchain. I would keep it outside of the US. And I would just try to block actually US investors. Or I would have a true utility token where I built a network, it's being used like the fashion coin, let's say. It's being used already maybe, and then you don't have to, and then you could raise equity separately as a Reg D offering or something, and you don't even talk about a token. The token's only in the ecosystem. But the only problem there is that if it's a kind of ERC20 or something, somebody else could take it and just list it on an exchange, or it can be on decentralized exchanges, which you have no control over, but you could get in trouble for it.
So when we talk about blocking the United States, I'm sure, you know, it's a very sophisticated audience. I'm confident you know what that means. But when you're blocking the United States, you can put technology into your website that will read the IP address and identify you as being in the United States when you come onto the website, and the screen will go white. Okay. Or if you try to click on a white paper, or you click on, you know, invest here for investors, the screen goes white and you're blocked out from it. So it's not a question of, oh, if your website has discussion on it about ICOs, investing, all the great opportunities to invest in the company, and you're not offering to the United States, then you should block that your face page of your website as well, or else clean up your website and put it behind a page that is not accessible to U.S. potential investors. Why? There have been, the states actually are just as aggressive as the federal SEC is in enforcing these sorts of situations. Texas in particular, the Texas Securities Commission is very aggressive on enforcement. They have gone after Hong Kong companies who weren't per se selling into the United States, but their website was accessible in the United States, and someone in Texas invested, and they got a cease and desist from the Texas Securities Commission. So it does happen. It is very real. Don't just think about the SEC. Think about the individual states. You've got 50 of them. There are varying degrees, certainly, of aggressiveness in going after some of these issues.
By the way, Jessica, you made a big ICO in the United States, and SEC come to you, and I think there might be 5 or so public stories about settlement with SEC. Could you share some details?
I'm sure there's more than 5. There's also more than 5 about how much I raised and then how I did it. It's all clear there. We did have a token crowd sell, an ICO, whatever you want to call it. We did not exclude the US. We were hopeful for a lot of things and under the impression that it would be okay. So basically, we were subpoenaed by the SEC. We got a big slap on our wrist and we're told this is actually the way that they see things. They view everything right now as a security, and we need to operate like a security. We need to operate like a publicly reporting company. And yeah, we're right now in the middle of wrapping this up with them. And I think if you have done an ICO or token crowd sell, you probably were subpoenaed as well. I think, I'm not sure what else.
There are some like basic rules in the investor relations world and so on and so forth. But one of the most the red flag that is the worst thing to put into a white paper or put on your website is to guarantee a return on the token, an IRR, any kind of internal rate of return, or I've seen things where if you buy this token, it's going to go up 10 times, and you're going to get like a 10 bagger. So if there's anything that you do, just, even internationally, just don't do it. Because there's no reason for you to put that in there. If you're doing a utility token that's supposed to be used for the network, the exchanges are a separate operation. And you have to understand the difference between the two. And I would definitely lean more towards that. I do think that everything that's happening here is fantastic. I think it's great that the small cap and micro cap markets in some way and are generating capital because they're dead. And the IPO market in the United States has been destroyed because of this, because of rules and regulations. So I think it's all great. I think what La Token is doing is great. But unfortunately, you just have to, just be smart about it. That's all. Just listen to good lawyers, and if you do make a mistake or a perceived kind of mistake because you were early, which is not really your fault, right? And you get in trouble, you just have to deal with it, and then you just move on, right? They're still standing here. They're still, they're fine. They're moving ahead with their company, and they're in the cannabis market on top of it.
Right.
So cannabis. I mean, there are red flags flying everywhere. So it's okay though. So you're going to push. I'm involved in the cannabis markets. We're going to push on. This is innovation. It's about innovating.
Jessica alluded to something in terms of the conversations that they've been having with the SEC and the settlement with the SEC. And I think somebody else mentioned it earlier, but when you let's assume that you believe the SEC that all the tokens that are out there are securities, unless they've told you otherwise, which they haven't. Once you reach X number of holders of those tokens, which is 2,000, you are required to register as a reporting company under the Securities Exchange Act, which makes you a public reporting company in the United States and subjects you to annual audited financial statements, annual reports on Form 10K, quarterly reporting, et cetera, et cetera. So there's a lot of implications to having a broad holding of your tokens out there if your token is considered a utility and is out there trading.
You had mentioned something. Over-promising profit. We actually never did it, and we're still targeted and reached out to. There were a lot of things that we did to make sure that it didn't look like an IPO, wasn't acting like an IPO. Our tokens also burn. It's used in our network. There's a lot of things, but the SEC, no matter what you want it to be or hope for it to be, or what maybe your lawyer has told you it could maybe be, all of it is just out the window. It's really whatever the SEC is wanting to fit into their square. If you're a circle or triangle, you just better rework it until they come out with something else, because this is the way that they want it to happen. I think that they're trying their best to make sure that nothing gets out of control. There were a lot of crazy things going on in 2017 and a little bit in 2018, and I am working with the SEC right now, and I feel it was scary as hell when I got that subpoena. But they are wanting to make sure that everything is cleaned up and organized so that the future can move forward. It does feel like they're halting innovation. It feels horrible to understand that I need to restructure some things because I had this grand dream, like a lot of us did. But really, if you're willing to comply with them, stay up to date on regulations, talk with lawyers, talk with people in the industry, come to things like this and get information, the accurate information. I think that the future is really hopeful, and I think STOs are still early. I think ICOs are probably gone for right now, but yeah, I just wanted to let you know. We thought that too.
Great point. Greg, you mentioned that some of the companies on your radar or maybe your portfolio are going to do STO. Could you elaborate on this? What do you expect from these companies? Why they want to pursue this?
Yeah, so there's out of the 19, there's 3 that actually have tokens or that have issued tokens. There's 2 others that are hitting the market now and they're considering it. Obviously, as you mentioned, the ICO market we believe is dead. We are working very hard to sort of talk them out of it. We have in the last 6 months, and now that the market we feel like is recovering a little bit, it may be a better time to look at that. They're looking at the STO side. If they are going to comply and do everything with the regulators and what we need to do, it's really an option. We talked about it earlier. Should we just stick with doing Reg D, Reg A, or should we push them over to security token? And it depends on the investor as well. And there's a lot of times that you have to move to where the investors and what they want to do and how they want to place those bets. For us, investing in companies, it's not something that I'm super excited about doing. So we personally aren't doing it on the outside, but if we've got companies inside and they're finding additional capital via that market, and we'll help them any way we can. There's a lot of great companies that are out there that are consulting and doing things with that. But again, it's very, very early, so I think you have to be uber cautious about it.
Are these companies in your portfolio? This is two companies which are planning. This is still ads in your portfolio.
Yeah, I don't think they'd like me to mention who they are right now because we're still trying to figure out what they do. And we're consulting with one that again is in the precious metal side right now, and it's an interesting play because they want to back it by gold and they want to have it as an asset, which is something that's interesting, and to me anyway, I believe that's a lot more tangible, and that's something there that's greater than just a token into something that's into the future. So for those guys, we're talking to them, but there's been a lot of folks that have tried to do something in precious metals. Again, it's too early to tell. I can't even say if they failed or not.
Is this a systematic fundamental value for a venture fund to get his portfolio company to security token offering? Is there a liquidity premium if this liquid company owned mostly by this fund and founders became available to universe of accredited investors all over the world? Is there a premium which immediately benefits the fund, which partly exits the company by selling their shares via security tokens?
I suppose there could be. I haven't looked at it that way. So I don't look at a faster exit or more liquidity quicker because of an STO versus the path that they're heading right now. That's personally, I don't view it that way. There are some outside entities or investors that do see it that way, but I don't know that that path is any faster, quite frankly, when we're at least a year away from seeing what those secondary markets do, and we don't even know where that's going to turn. So I would encourage them to continue down the path they are. I don't know that it's any quicker, so for me that's not a reason I would do it.
Yeah, so I Greg makes a number of really good points. One being that when you're looking at tokens, you got to consider what the investors want. And one reason that a company would issue tokens instead of equity and security tokens is because there is an investor out there. There is a whole new market that's developed that wants to invest in tokens. And so for the younger companies, it's a great opportunity to capture and raise capital that they otherwise wouldn't have access to, absent this particular market. Those tokens, at least at the moment, since you can't do a public offering in the United States with security tokens, are, as we've discussed earlier, issued under a private placement exemption, like a 506B or a 506C. So when you talk about liquidity and the secondary trading market, they're locked up for a year. You can't do anything with them really for a year. But what we saw last year in the market was a maturation in the investment market with funds coming in, institutional investors, family offices, private equity groups, venture groups coming into the market, and strategics, because they understood and they weren't afraid of doing or accepting tokens on a private placement sort of basis, and being in it, as Greg said, for the long term. At least for the year lockup, they weren't afraid of that. I've seen lockups in the UK that go out 2 years, and in Canada for 18 months to 2 years. And it's like, wow, we've got a real deal here in the United States on a 12-month lockup.
Yeah, I think I kind of agree here too. So you're just going to have to deal with the jurisdiction issue for now, and then also if you want to do a kind of security token in the U.S., there's a 1-year lockup anyway. So hopefully by the 1-year lockup being up, there might be a secondary trading market being approved. That's really the net. You kind of blame, and they're like, we know that actually Congressman David Sanders, we have 2 lobbying groups that I'm a part of. These are former, these are people that are, from the NASDAQ, the NYSE, we all worked with, with FINRA, and, we're trying to help the ball move, move ahead, and we understand what we understand. They have, in some ways, it did get out, we all know it got out of control. There's no way that it didn't, and it's a global. It also happens globally. It's not like you have a regional or a national ring fence around this thing. It just flies all over the place, and it's so liquid. So it's scary. It's scary for the regulators. So they're trying to say, if when $8 billion moves into a marketplace in less than a year, that chart starts to look pretty scary. And if that all blows up, you can have another financial crisis on your hands at some level. So they want to try to stop that, obviously. So they're doing their job. Now that said, of course, we have to help them. It's all about education. Blockchain-2020.org. We have a new website that's going to go up. We're trying to get blockchain itself on the agenda, so they just talk about it. It's like the internet. It's like, why isn't there a kind of internet? There was the kind of internet czar during Bill Clinton, and I'm not a Democrat, but Bill Clinton did a great job. He put together the internet czar. They figured out a sandbox for the internet companies. Why are we not doing it here? Why are you chasing everyone away? So that's the education process. I do agree that if you do the STO now in the US, you're going to have a lockup period anyway. Be careful about trying to create a utility STO token, because you can't have 1 billion shares outstanding. I mean, you could, but you're going to have thousands and thousands of investors. You'll become public, whether you like it or not, and then you're going to be in a whole other world. But if you do it now, just know, in a year from now, we might have markets open anyway. And I know the conversations are happening, so.
By the way, does this lockup work in case of Reg S? So, can you sell immediately for international accredited investors outside the US?
Yeah, so Reg has is an exemption for sale outside the United States. So you could have a completely non-US transaction. Non-US company selling outside the United States. It's done for purposes of the SEC under an exemption called Regulation S, which is an offering that's conducted offshore. Can that security or can that security token come into the United States? The answer is it depends. There are different lockup periods on that token. If you are a U.S. company and you're selling outside the United States, that token can be back in the United States.
There you have it, to STO or not to STO, LA style. So, a lot of great details on securitizing crypto stuff or doing it the old school method as Reg A or Reg D or even crowdfunding. Thanks a lot for joining. We share